The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, just kicking it off a little bit early here. If you can hear me, please, a couple of things actually. If you could just let me know if you are a dad or a father, just type in the number of children you have and where you're tuning in from. That would be much appreciated, something a little different. Hello everyone, just starting a minute or two early here, just see if you can hear me okay. Maybe this time a little different. If you could just let me know if you are a dad and how many children you have, just type that into the chat box and then I'll know that you can hear me. Maybe let me know where you're tuning in from. We've got Stephen has two and yep, two, Constantin. Svram says dad, yes, good. Jeff says uncle, one. That's great. Stavros, one. Frederick says hear you fine. That's great. And Mike from the UK is two. Neil, two. Andrew from Dallas, Texas, with us. And Ed, that's great. Dad, two daughters and one brand new grandson. Congratulations, Ed. That's so awesome. And Mohammed, hello from beautiful Vancouver. Steve says sound is great. So I think it's shaping up good. I'm just going to start the recording and officially welcome everyone, and we'll get going with our webinar. Thanks, everyone. Just waiting one more second for the streaming to start for the YouTube. I think I just have to wait a quick second there, but I'm getting lots of great comments. Don says, married father of three. That's awesome. Paul, greetings from Worcester in England. Three. Now, wait a minute, Paul. One of each. How does that work? That's great. Ruben from San Juan, Puerto Rico. That's awesome. Pessy. That's awesome. Yeah, Pessy is absolutely right. He says, I have one and you have two. And Pessy has met my son for sure, I believe, Jamin. And my daughter Jaleese is creator of one of the searches. YouTube is on and going. So listen, welcome everybody. We can absolutely get started here. We're recording this session for everyone. Xavier, father of two, wonderful to hear. Ashram, Guliani, actually two and three grandchildren, wonderful. And Eric from Pembina in North Dakota on the beautiful Red River and three children. So I think it's going to be a special Father's Day for a lot of folks here on the webinar today, and hopefully we kick it off really well for you with a great webinar, and I'm sure we will. Phil from San Diego, grandfather of three, wonderful. I'm sorry if I've missed some. They've been coming in really, really quick. Glenn from the Blue Mountains in Ontario, and Les from, with us as well. That's awesome to have you with us, Les, writer and column editor for that wonderful Stocks and Commodities magazine. Great to have you with us, Les. And gosh, Raj, good to have you from Houston. Two kids and three grandkids. Well, listen, that's awesome. And I'm so glad you're here, everyone. Thank you so much. Welcome. Wonderful to have you with us. I'm just making sure I've got everything going. We've got the YouTube, we've got GoToWebinar. So hello and welcome everyone again for joining us today. My name is Stan Heller. I'm the consultant for VectorVest Canada, and I helped create the Mastering Moving Averages course, and really had a lot of fun putting it together, and I've been getting great feedback from that course. And so part of what we're going to teach today is sort of taken from that course, and some new stuff as always. My goal always is to give you great content that you may not have had before. So hopefully we can deliver on that for you by the end of the webinar. And folks, I'm pleased to have with us John Marabu in the background. He's moderating today. He'll be checking in on the YouTube chat as well as the GoToWebinar. So if you have any general questions, John is well positioned to answer them for you, and he'll also flag any questions for the entire group. Now, when we talk about moving averages, and this is going to be a special event, and I'll start moving along here. I guess I should make sure there are some new people, and I should make sure you know how to use the chat box. This is it here, and if you have a question, just type it in here at the bottom left, and then click the send button, and then it should collapse on you, and you can grab it up top here with your left mouse, just click on it, and you can move it over to the side, for example, that sort of thing, or move it wherever you want, and then just click on this orange arrow to open it back up again. And if you lose sound or video, please log out and log back in. That is the surest way to get back onto the webinar in good order. And as far as the replay, it will be sent out to everyone, and it'll also be on YouTube, I believe, right after the presentation. So a couple of ways to review or just check on something that you might have missed during the webinar. Wonderful to have you with us. Again, this is about mastering moving averages. And how many of you are already using moving averages in your trading? Maybe give me between 1 and 5, 5 being I use it all the time, and 3 being I use it sometimes, and maybe 1 I don't use moving averages. Maybe just let me know sort of what your experience has been. Les, Alfred, Ed, Raj, boy, they're going by quick. I see a lot of 5s. I see some 3s, 2 for Brandon. I see 1 here going by quick, but Stavros is a 1, and Stephen is a 1. Some 5s, mostly 5s. Ross says 2, and not a lot of success. So Ross, I hope we can help you out with that today. Give you some real good tips and pointers for how you might use those moving averages a little bit more effectively. Jagdish is the same 1. But looks like a lot of you have used it with good effect. Martin says 5 using the guppy and the finger 4 squeeze. And the guppy multiple moving average trading system is really pretty fantastic. And the finger 4 we learned about in the May International Online Forum. And it's interesting, that's Margaret Bell's favorite graph setup. But she has changed a little bit at the top, and she's now using the EMA squeeze 3 moving averages that we'll learn about later on in the presentation today, finding them just a little bit more effective than her other moving average setup. Yeah, Phil says, I'm a believer. I think it's a 5. And Karen says using the 5 and 8 moving averages, and Raj saying I use the guppy all the time. Karen, guppy, but late entry. So there you go. It's something you really got to work on. All right. Well, listen. Let's get into it here and cover off what we want to cover in this presentation. And again, thanks to John in the background. He's ready to answer your questions. And I'm going to try and kind of save the questions to the end as much as possible. I will break at times to answer any questions as we go along, but there is quite a bit of content for you. I want to keep this as helpful and practicable as possible, so I'm going to try to get through as much as I can. But what we're going to learn today in this presentation is why use moving averages. Just talk about their effectiveness and why they're so well used by not only retail investors like you and me, but professional traders and investors and analysts as well. And then we're going to talk about the most popular moving averages, and I'll actually go to the graphs and set them up for you so that you have a knowledge of how to set them up in your VectorVest software. And how we can use the moving averages to identify the trend. I think this is an often overlooked use of moving averages that I want to make sure we're really all comfortable with to use the trend of the moving averages. And then we're going to talk about the trading system, and I'm going to use the EMA squeeze, but my main purpose for showing this is so that everyone understands that moving averages can form a very effective trading system, complete except for maybe all of the money management that you might want to add, such as the Dr. Toledo's 1% rule for never losing more than 1% of your total account size, the 50% rule, never give back more than 50% of a reasonable increase or gain. Those sorts of money management rules that we do talk about in the Mastering Moving Averages course and give you examples of that. So we won't be able to go into all that detail today, but the EMA squeeze, if you just used it the way I'm going to show you today, it's a very effective strategy just on its own. And I just saw a comment from Richard. He says, I use the EMA squeeze and I love it. So I really appreciate that, Richard. And then at the end, I'm going to mention the special Father's Day offer. I'll show you exactly what you can get with the 11 lessons in the Mastering Moving Averages course. And then the educational team, Ray Clark, our Vice President, Educational Services, has put together a really nice offer for anyone that wants to take advantage of the pre-recorded sessions or lessons in the Mastering Moving Averages course. All right, so why moving averages? Well, here's a key concept. Moving averages remove the noise by smoothing price action. Even if you just take a simple 3-day moving average and use that as a proxy for price, all of a sudden the waves and the cycles of price action just get all smoothed out, and in that way you can determine the trends much better. So it really does make the price trend and momentum more discernible. They help traders and investors predict if the stock will continue moving up or moving down. Again, it's less volatile typically than the price action using candlesticks or the open, high, low, close, whatever you use, because it just smooths out just removes the noise, smooths out the price action, and it just works so much better. And moving averages are so important, they actually form the basis for several popular technical indicators, including Bollinger Bands, stochastics, and MACD. Now, moving averages have been around as technical tools much longer than any of those, but they've been the basis for those technical indicators, and they're very popular as well. So why moving averages? Here's a little bit about them. Moving averages are one of the simplest yet most powerful tools in technical analysis. They are lines that are overlaid on top of the price information on your graph. And I'll show you that when we go into the VectorVest software, how you can add moving averages and how to read some of those moving averages. But it's on the upper part of your graph where the price is. That's where you'll create the lines. Or you can, in VectorVest, create moving averages on relative timing, very effective, for example, or on just about any of our other indicators in the VectorVest program. And those would appear in the subgraph in your graph panel. The period of the moving average is determined by the time frame of the graph that you are using. It can be daily, weekly, or intraday. So for example, if you have a 40-day moving average and you change the graph to weekly, all of a sudden that is a 40-week moving average. And the direction and slope of the moving average lines help identify strengthening trends and also the weakening trends. They'll identify the times when you might have a sideways trend, and then you get a breakout, and it'll identify a strengthening trend. And I'll show you a little tips on the graph for how you can identify whether the trend is strengthening or weakening. And then price and moving average crossovers can help you pinpoint when to buy and when to sell. That can be a single moving average. In the Mastering Moving Averages course, we teach about a single moving average using some money management, but it can be very effective when price crosses above the moving average as a potential buying opportunity. We have some rules around that. And then also when price crosses below a moving average, that can be your sell time as well. And you can set up alerts to receive those reminders of when to sell. So price and moving average crossover is very, very useful. So question that I get quite often is whether to use a simple moving average or the exponential moving average. I can guide you a little bit on that. It always comes down to a personal choice. I would say that the simple moving average is probably the most popular among most analysts, but there is a role for the exponential moving average, and we use the exponential for the EMA squeeze strategy, for example. So a key concept here, these are the two most widely used moving average types, the simple and the exponential. The weighted moving average, just like the exponential, puts more emphasis on the recent time period with a little different formula, and it can be very good as well. It kind of hugs price maybe even more than the exponential moving average, but the exponential reacts more quickly, and that's the key for a lot of traders. It reacts more quickly. So swing traders with a short-term perspective tend to prefer the exponential moving averages. And why is that again? Well, EMAs react quicker to price changes, so there's less lag, and it's going to get you in and out maybe a little bit quicker. So here it is what it looks like on a graph, and you can see over at the left I've got the EMA 10 in dark blue, the simple moving average, which typically is referred to as just moving average, or MA, is in red. And then for the 40 EMA, we've got a light blue, and the 40 simple moving average, we have the orange. So if we look down below, you can see that typically the 40 moving average is going to lag quite a little bit behind the 40 EMA here in light blue. And then the faster moving averages, again, the 10 EMA exponential is going to react more quickly. You can see it here. The 10 moving average in red is still going up. And here we had a little bit of a blip to the downside, and the EMA 10 broke down below more quickly, came right back up, and then fell as soon as price began to fall. So it does react quite a bit more quickly, and especially on the shorter moving averages, this can be helpful if you're a swing trader, for example. And Edward is asking, when do you use the Hull moving average? We don't actually have that in our VectorVest program, Edward. It can be a very effective moving average as well, but we don't have that in our program. The institutional moving averages. So I kind of want to talk about some of the most standard, I guess, moving averages, and you can modify these, and we certainly do in some of our strategies in the International Online Forum. We bring in guests that use different moving averages and are able to get excellent results with a trading system around those. But the institutional moving averages typically are the 10 moving average, and that can be simple or exponential. We have the 20 moving average, the 50 moving average, again, institutional. There are some fund managers who can't buy stocks if they fall, if their price falls below the 50. And if they own a stock where price falls below the 50, you may see some buying volume to drive that price back up. Otherwise, they have to go ahead and sell. So that's a very important moving average to be aware of. And similarly is the 100 moving average and the 200. A lot of fund managers have rules around those moving averages for their longer term investments, for example. And then on the weekly price graph, here are the most popular periods used by more sort of the institutional type of trader and investor. And again, we have the 10, and usually these are simple moving averages. We have the 10-day or 10-week, I should say, simple moving average, which is basically a 50-day moving average. And then we have the 20-week moving average, which essentially is a 100-day moving average. And then we have our 50, which is essentially the 200-day moving average. So those are your weekly moving averages that are most common in use. Now, there are some other popular weekly moving averages, especially among our subscriber base, folks who attend our international online forums. The 2 and 5 weekly EMA combo, very popular with Bob Turnbull's bull strategy. The 3 and 8 EMA combo, I love it on the weekly graph. The Jockey Club uses it on the daily graph as well. So different ways to use it. And Petra Hess brought that to our user group, I want to say, 7 years ago. And it's been very popular with subscribers ever since. And there's different ones you can use, no question about it. Different ones that you can use. So I can go ahead and set these up on our graphs, and I'll just go into the US program. Folks, it works the same whether it's US or Canada or Australia, Europe or the UK. It works the same. Kind of a rough day in the markets today. It's been kind of trending that way. You can see how long we've had a primary wave down, urging that caution, and a couple of red lights today, so caution is advised. So I'll just go to the Viewers tab, and in the Stock Viewer, now we've got some wonderful watch lists, S&P 100, NASDAQ 100, Apple suppliers, COVID stocks, lots of them. But here's just the Stock Viewer. I've got 30 showing here, and I'm not going to graph them all, but I'll hit the graph all button. I could graph selected or graph the top 10 or so, but I'll graph them all. Just won't go through all the graphs. This is your basic layout. When you click on the graph layouts, VectorVest layout, this is your default layout. VectorVest Simple adds earnings per share and the stop price, the STOP price. But this is your basic layout, and it's got the 40-day moving average. And just off the bat with Citrus Pharma, you see one use of a 40 moving average. It's VectorVest default, and we talk about it in the course as the reversion to the mean average. Typically, when price pulls away and gets extended away from the moving average, it'll tend to pull back. And here we found support again at the 40, rose again, went a little bit sideways, allowed the 40-day to catch up a little bit. Then we took off. And so just let me know with a Y or an N, yes or no. Do you like this stock now as a buying opportunity? Yes or no? Notice the RT is rising all the way to the right edge. But just in the chat box, do you like it to buy if it's going up tomorrow? Just give me a yes or a no. Now, I put on the earnings per share, and it's kind of falling. But these drug companies, they do well with FDA approvals or FDA results coming. I see a lot of no's. Tim says no. Glenn says no, earnings is going down. Well, the other problem with this, and thanks to those of you that found it, is it's getting quite extended away from the 40-day moving average. So you can really anticipate potentially another pullback closer to the 40. So you have to be cautious when you see that. And it's really just a visual thing. Um, how far is extended? This you might have thought wasn't really that far, and I would agree with you, but it did pull back from there and gave you a really good buying opportunity when it bounced off of the 40-day. And then the other little technique that I'll just share with you because we're on this stock is if you own this stock and now you have some profits and you want to lock some of those profits in, you can take that 40-day moving average and just come over to the arrow here and just bring it up, whoops, not that far, right under the price as it's rising. That now is a 5-day moving average. And if price falls below that going forward, that could be your exit to take profits. So just an idea there. All right, now I said I'd show you how to set up your graphs to show some different things. That's the 40-day moving average is terrific. When price falls below it, it's a really good early warning. Don't know if I've got one here. Let's just have a look. So for example, back here, price fell below the 40-day moving average. RT fell below 1. That's a really strong early warning for you to either take profits or protect, and certainly not to be a buyer at that point. But let's just go in and add a couple of these moving averages. So the way we add a moving average in VectorVest, we just right click in the price area, anywhere in this gray area. You'll notice one of the options here is to add moving averages. And from here, we can add an exponential moving average. Let's add the 10. We can right click again, add moving averages. We'll add the exponential 20. Right click again, add the simple moving average of 40 again. I'm going to make this 40 a 50. So I'm going to bring it up, and I'm going to make this 40 a 100 just by clicking on the up arrow over here in the control panel. And then finally, I'll add a simple moving average of 200. So this is going to be our trend defining setup in the graph panel. So I'm going to get that all the way up to 200. And we do this, we move the arrow before we click on the moving average. It'll go quite a bit faster. So I'm not going to worry about colors too much. It's kind of pre-selected some colors. I will come in and change the 200 just to show you. We right click, change the style, and of course it dropped it onto another screen. Let me pull it over here so you can see it. And we'll just make the 200 orange, and to differentiate it, I'll thicken the line a little bit. All right, I'm going to go to a 1-year graph. And I love starting with just without price, just the moving averages. And now we can see a trend really that started back here when the 100 and the 200-day moving averages crossed. The fast moving averages, the 10 and the 20 had already crossed and were moving up. And then the 50 was also starting to rise. And notice we actually had a buy rating from VectorVest way back here as well. But this kind of tells us that the trend is continuing. So we like that. And we look with price to see areas of support. And notice how price came right down to the 100-day simple moving average right here. And we found support. Here, price came down. It kind of reached a bit of a high here, pulled back to the 50-day moving average right here. And we got a bounce. And so you can use these moving averages for support and resistance as well. So here's XBEL. And again, we start with price off. And notice back here, we got the 100 crossing above the the 200. We had the fast moving averages, the 10 and 20 already crossing and above the 50, and we're in a nice uptrend. We had some sideways action. Might look a little worse if we put the price on. We'll have to take a look. It actually even got a sell rating for about a day. So this might have been pretty serious volatility in here. But notice how the moving averages just smooth things out, allows you to maybe stay in that stock and ride it all the way up. Earnings per share rising beautifully. We put the price on. Yep, price did come down. We found support at the 50 here, found support at the 100, the 100, the 50. Lovely. Here, the 200 on NVIDIA became support for us right here. And we got a nice bounce, came back and retested the 200 and bounced again. All right, so that is end of day. And we go to the weekly graph and say 3 years out, for example, just smooths everything out for you. I love this look on the weekly graph. I'm actually going to take off the 200 day and we'll just leave on the 100, the 20, the 10, and the 50. But you're seeing the trend. Does anybody like that? Just tell me whether you like looking at these trends using the lens of these moving averages. And you might have different favorites. A lot of people like the 79, Mike Simonato's favorite. But give me on a scale of 1 to 10, give me a 10 or a 5 or something in the range there. And if you think, no, moving averages aren't for me, just give me a 1. I won't tell anybody. Yeah, Con says great. Yes, definitely takes the subjectivity out of it, Richard says. Awesome stuff, says Dana. Yep, I like it, says Mohammed. So that's a little longer look, and it's a really effective way to go. And you know, the weekly moving average or weekly graph layout is sometimes overlooked. Here you've got a fairly volatile stock, and the moving averages, the trend has never changed. And I said I would give you just a little bit of a tip on identifying the moving averages. I look for this 35 to 45 degree angle to know that we're in a nice uptrend. We look for the thrust after a little bit of a squeeze here. We look for the thrust to the upside, and then we look for a 35 to 45 degree angle. And recently I've heard analysts talk about this, and they actually talk about it. They look for basically 2 o'clock when the moving averages are rising toward 2 o'clock, you're in an uptrend, and if they're falling toward 4 o'clock, you're in a downtrend. I kind of like that way of identifying the trend. In the course, we teach the 35 and 40 degree angles, which works, but 2 and 4 o'clock may be easier. All right, so I wanted to show you that. Hopefully that's all good. Let's go back to the slides. And again, I should have just shown you one more quick thing, and that is, once you've got your layout, you'll notice how it stays the same as the last time that I opened the layout. So unless I change things, it'll always open to this layout. But if I want to make sure, maybe I've changed my colors and I've got the graph layout the way I want it, I want to save this layout. I'm going to come to Graph Layouts, click on Save Modify Layouts, add a new layout, and then I'll just type in Father's Day multiple moving or mastering moving averages. Whoops, that's got to be an A at the end. There we go. So Father's Day mastering moving averages. I would probably put define trend, something like that. I probably wouldn't have this first part in. It's just a defining trend system. And then we click OK. And now I can go back to the VectorVest layout and then decide, oh no, I really want that defining the trend layout. So now I can just click on it, saves my colors, saves my layout, and I'm all set. All right. Lots of questions coming in. And again, John is going to flag some of them for me, so I'll make sure I have time for those. So let's just go back to the slides. All right, so we set up our graphs. So there's 5 key ways to use these moving averages, and we actually covered off some of them here, I think, in the graph demonstration. But we can define and invest with the trend up or down. So we can identify that trend. We can determine how strong the trend is just by, again, that slope of the moving average. If it's moving up toward 2 o'clock, that's at about a 45-degree angle. That trend is quite strong. And similarly to the downside, if it's moving down toward the 4 o'clock, then the trend is really weak. We can identify buy and sell signals. This is used in trading systems, and we teach quite a few trading systems in the Mastering Moving Averages course that I'll tell you about later. But that helps determine the strength or weakness of your stock as well. And you can set up your trading system based on the moving average crossovers. We can determine broad market conditions. Is the market healthy and in an uptrend, or is it weak and in a downtrend? How strong is the trend? In Canada and I think the other countries except for the US, Dr. Toledo, our founder, settled on a 65-day moving average for market timing. And it works extremely well in this broad-based Canadian market with about 3,000 stocks. We buy when price is above the 65-day. We can get a confirmed up call if the market other market conditions are met. But it's the 65-day moving average. Let me just eliminate the drawings. And I'll take off MTI and buy-sell ratio and RT. So there's the 65-day moving average. There's our confirmed calls. Was that a good opportunity to buy into the market? Here we had a little bit of a whipsaw. The confirmed call to the upside came a few days after price got above the 65-day moving average. Here price fell below the 65-day. Does anybody know what this period was? Does anybody not know? This was definitely the COVID collapse. Now, it took a while for the confirmed up call to come. It took a while to get price back above 65-day moving average. And that's where some of the other timing signals can help us get in a little bit earlier. All right. So let's try to see if there's any questions there. All right. Yeah, Joe says, I see that pattern in my nightmares even still. Oh dear. But we've had such a wonderful recovery, Joe. I hope you've gotten all of it and more back. And I'm sure a lot of our subscribers have. We got an early warning on that one for sure. All right, so we can determine the broad market conditions. We looked at, just in the brief time, we looked at those few graphs. We saw that we can look for support and resistance using moving averages. Finding support in an uptrend gives us another buying opportunity, or when it hits resistance, we can wait for price to get above it to buy. And then is price extended? So showed you that one as well. Determine if price is overextended and far away from its mean average. And in VectorVest, we love to use the 40-day moving average. All right. So the EMA squeeze, we've talked about this before. I introduced this well over a year ago now at a Financial Freedom Summit. And then Jerry D'Ambrosio has done a couple of strategies of the week on this strategy. And he uses it sometimes in his swing trading coaching. And he invited me to present to that group, and I was happy to do that. This is a terrific strategy for that type of purpose, a swing trading type of short-term strategy. We use the 5 and the 8 and the 13 EMAs. We use the direction and slope of the 3 moving averages after a squeeze or a quiet period. And then we can confirm if it is if an uptrend is setting up. We use the slope of those moving averages, and we judge whether the trend is likely to continue. And again, we prefer the exponential moving averages because they do react to price more quickly, and so there's less lag. John says, why 5 instead of 3? I have found that the 5 works better, John. You can try the 3. The 3 and 8 is very popular, but you're not going to get the squeeze for the selling as early as you might get with the 5. But, you could try it. This is what works for me. For buying long. So, after a pullback or quiet period, the 3 moving averages, the 5, 8, 13 EMAs, squeeze together and start to rise, pulling apart or fanning out in an upward trending slope. That's what we're looking for. We actually want a thrust to the upside. We don't want them just kind of going sideways. They should really be thrusting to the upside. And VectorVest RT, the relative timing indicator, should be rising and hitting higher lows, and it reduces the possibility of a false signal. And actually, in the search that we teach in the Mastering Moving Average class, we want that RT to be higher today than it was 3 days ago. So at least over the last 3 days, it's higher, hitting a higher high over those 3 days. And then the 50 moving average is added, and that's a simple moving average. It's added to the graph to confirm price is above that institutional buying level that I mentioned to you before. And I am going to show you some examples, both in the slides as well as the software. So the buy signal is generated early in the development of the trend, but there are always ways to get additional confirmation. We've got the RT rising. We've got price above the 50-day moving average. We can look for additional support and resistance. There's lots of things we can do to confirm. Oftentimes, we will get a new buy rating, and I like to think the EMA squeeze kind of confirms the new buy. And sometimes the EMA squeeze trigger will happen after we've already received a buy rating from VectorVest, and that's just additional confirmation. So for selling the long positions that we own, a sell signal triggers when the trend is dissipating. So it can tend to come, depending on price action, it can come fairly early or it can come late. But the EMAs squeeze together and then separate and fan out as they start to fall. So it's just the opposite of the buying opportunity, where the EMAs have come together and then fan out to the downside. They fan out toward 4 o'clock. Okay? And there can be an early warning when the fast moving average, the 5 and the 8 moving average kind of start to roll over and squeeze together, and especially when the 5 crosses below the 8. If you're really in protect profit mode, maybe the position hasn't gone up as quickly or as far as expected, and you want to, at least squeeze out some profit, you might exit early. And so we teach some of those early exit signals or triggers in the course. The RT is falling and hitting lower highs is another early warning. But here's your line in the sand rule. This is to avoid a catastrophic loss with any single position. And sometimes you're going to say, oh, I should have just held in there. But this is your line in the sand. It's like VectorVest sell rating. You just never ignore it. And that is when the fast EMA, the 5, crosses below both the 8 and the 13, the medium and slow moving averages, prudent investors, you got to sell. And conservative investors, obviously, you have to sell. Okay, so that's your line in the sand rule. So here's kind of what it looks like. We want to, the rules are, we wait for a bullish market, the DEW up, for example. Kind of a fresh timing signal is always good. And then price above the 50-day moving average, the simple. RT is trending higher, at least over 3 days. And then the 5 EMA is greater than the 8 EMA, and the 8 is greater than the 13. Here's what it looks like. We've got our squeeze. This is all happening below the 50-day moving average in this case. We've got our squeeze or quiet period right here. Then the moving averages break to the upside and start to fan out. And there's our first candle crossing above the 50-day moving average. So that is our trigger right there on that candle. And we would buy the next day if we get follow through. Notice the RT is rising, and there's our trigger candle, and we get follow through. Sell rules, again, prudent and conservative. 5 crosses below the 8 and the 13. Looks like this. Now there are some warning signs I'm showing here. You'll notice that the moving averages have really spread quite far apart here, which can be a bit of an early warning of a potential pullback. So that's just something to look for. We notice RT has peaked and is starting to roll over. The 5 and 8s EMAs here are squeezing together. And a bit of an early warning. My only caution is if we're still in a strong market going up, this is an early warning, but that's all it is. And if you sell too often on these early warnings, you're going to miss out on some more significant gains. So it becomes a bit of a judgment where you're at with your money management and your current profit levels. But here's where you must sell. 5 EMA crosses below the 8 and the 13. A 3-month graph tends to work the best to see these signals. Just 3 months daily. The RT continues to hit lower highs, so lots of warnings there. Okay. So here, for example, we've got that squeeze. I think this is from the 2 little graphs before, the mini graphs. This is our squeeze. We break above the 50-day moving average, and we're already fanning out beautifully here. And this squeeze lasted a really long time and then started to flatten out here, and we got a sell signal up at the top after about a 49% gain. Folks, they aren't all going to deliver those kinds of gains, but it's wonderful when it does, and they certainly can do that in an uptrending market. Sideways markets are going to be more challenging, as with any technical indicator, and particularly moving averages. So here we're kind of going sideways and sideways, break to the downside, and potentially another signal coming here with RT rising again. Big volume. We look for the big volume spikes. Here's what it kind of looks like with price on the chart. This is Kinross Gold, and we see the fanning out going on here. The buy rating actually came a couple of days before, but you notice we had a buy rating back here that kind of didn't pan out. So the EMA squeeze gave us a little more confirmation of a potential sustained uptrend. Here we're moving up nicely. The distance between the moving average and moving averages is getting wide here. We slow down a little bit on momentum, and eventually we get our sell signal right here. This is your line in the sand, must sell. RT rising here, but here hitting a lower high. So that's an early warning, that divergence. Here's another buying opportunity. And we've got the due timing signals on. We're in an uptrend. Here, we might have been sort of fooled into buying another trade, buying into a trade here, but we're in a DEW down timing for the market. And so we could have avoided that false signal right in there. John has answered your question. John, John G. He's asking, is pro trader required to identify these patterns? No. you can set up your graphs with the EMA squeeze, which we'll do in a second here. Um, for the search that you learn in the Mastering Moving Average course, yes, you do need ProTrader. And while you're in the course, if you don't have access to it already, you will get access to it so you can try it out, make sure it works for you in all the different strategies that we teach. So here's another one just to show you Apple, a big name company that everybody knows, and it worked beautifully back here in April 24th, 2020. Price getting above the 50. The EMA squeeze, not the big thrust that I would like early on, but definitely here would have been a great opportunity where the three moving averages are fanning out just a little bit better, pointing towards 2 o'clock, and we got a nice rally up to 31%. Here, notice we had a beautiful rally. This rally actually took us from about 105, maybe 110 to 130, and then we gave quite a lot back waiting for the sell signal, and it happened to come on a DEW down. But what is this candle pattern right at the top? Anybody know what this candle pattern is right at the top? I'll give you a hint. It is a bearish pattern. Yeah, it says black cloud. Klon says shooting. Dave says engulfing. And I would call this an engulfing candle. It engulfs certainly the body, if not the entire candle. So it's an early warning. And then the moving averages squeeze together, another warning. So you might take some profit up at the top here instead of waiting. And we do have a section on candlesticks and moving averages as well in that course. Yeah. Phil, I love that and that description. He says it's an impending disaster candle. Yeah, the length of the body, very worrisome. The length of the volume on the red side here. So that was a big warning sign. So here's a trade that I got into very early with the EMA squeeze in Canada. And we can see the volume spiking, RT rising, a little bit of a breakout here. So I know I waited a little bit. And typically this would have been the trigger candle here. But if you waited and bought in here, you could be forgiven. But then we see the moving averages separating, a little bit better confirmation. And then we got a nice rally. Didn't quite get a sell here. We actually got another squeeze. So an opportunity to get into the position if you weren't in before on this one. This would be your trigger. And you could get in. We are quite a bit extended from the 50, but the 50 is moving up beautifully. So you could get in again. Another squeeze here, so you could buy in again. And then eventually we get the sell over to the right edge. All right, so I'm going to set up some graphs. Just know the hardest, most time-consuming part of swing trading is to find the right stocks with the correct setup early in that trend change. There's three ways that VectorVest makes it easier. We have the stock viewer by itself. It allows you to rank, sort, and analyze the best candidates quickly and easily and look for that setup. We have watch lists. You can create your own watch list of stocks that are nearing the setup. Maybe they've got the trigger and you just want to track them to see if they follow through. You can put them in a watch list. And we have pre-built watch lists, the S&P 100, NASDAQ 100, in Canada, the Master Retirement Watch List, the TSX Composite, etc. And then you can also create a search, and it's a powerful search engine. And when you have ProTrader, you can actually set it up so that the rules, the 5 above the 8, the 8 above the 13 EMAs, are all in place. Price above the 50-day moving average. All the rules can be set out in your criteria for the search, and we show you how to do that in the course. All right, let's go to Canada and just quickly show you some of the setups here. Actually, I'm in the US again. Let's just change it up, and we will go to a watch list. And so if I scroll down, you can see we've got Dow Jones watch lists, we've got S&P. Under special watch lists, we have the NASDAQ 100, for example. Here's the S&P 100, a really strong watch list of stocks. It was actually Bob Turnbull in the International Forum that kind of drew this one to our attention, a very strong watch list. So now if I graph again and take us to our VectorVest layout. So I can go ahead and create the EMA squeeze. I think you already know how to do it now. I would just create the exponential moving averages, starting with the 10 and bring it down to the 5. And then I would add the 8 and the 13. I would change the simple moving average to 50. And I would be all set. But let's just do it by going to the graph layouts and find the one that I already have created in here. And under MMA, you'll see some of the other searches that you'll learn about in the course. There's the EMA squeeze on a white screen. The BS, somebody called me out on this the other day. The BS stands for black screen. Not what you think. So let's change it to the white screen. So this has now got our 3 exponential moving averages. I've got it set to a 3-month graph by default. I've got price or RT rising. And on NVIDIA, we got a really terrific candle as a trigger right here. And an opening price there at about $5.99, it looks like, over at the right. And then we're at $7.45. Back here, I want to make sure you know that this doesn't always work out. And the sell rules are designed to make sure you don't have a catastrophic loss. But back here, this might have been your trigger candle here, and then a candle to the upside. But we're above the 50-day moving average. We have the fanning out of our 3 EMAs. So if we got into the open there, that's 554. And then we see a bearish harami here, some more weakness showing up. And then eventually we actually got a sell slightly better than where we got in. But if you were late getting in, you either broke even or lost money. And that's going to happen sometimes. So here's another one. Currently no setup on DHR, but the last one might have been a trigger candle here, RT rising, and then an opening here at 232. Everything looks really good. We go up, and then we have our sell rating at about here at about 250. So it looks better than it turned out. Okay. We do want that moving average going through the volume is the 50-day moving average. Thank you for asking about that, Paul. And we just get that, as I mentioned earlier in the presentation, we can take just about any of our VectorVest indicators and add a moving average. So for volume, we just right-click, add moving average. We start with the 40 simple and just bring it up to the 50. And now we've got a really thick line for the 50 moving average. Okay. And I do that just so I can easily see where the big spikes are. I just prefer that. If I go out to a 6-month graph, you can see to the downside. We do have a shorting strategy for this system. We teach that in the moving averages course. And then we have the long strategy. So obviously we had some weakness in there. So here's another one that would have been challenging to make money on, and the 50 moving average is really falling, so that might have prevented you from getting in. We like to see that 50 at least flat and moving up. All right, Well, hopefully, folks, we've learned some really cool things today. Um, Maybe let me know. Just hate to use the same scale, but it's easy. Maybe on that 1 to 5 scale, has this content been helpful to you? If you learn nothing else and decide you don't need anything more about moving averages, you don't need to learn about 6 more or 7 more of the trading systems in the moving averages course. If you learn nothing else on a scale of 1 to 5, was today worthwhile to come out and spend an afternoon with us? I see some 5s. Thank you, Phil and Rob. A 4 from Ed. Thank you. Dana says, always learn something new. Great job. Thank you so much. Yep, Richard says, excellent. Simple session. Well explained. David says, very worthwhile. Glenn gives me a nice 4 in there. And yeah, John says, your presentation's always clear and beneficial. Thank you for that, John. John P. Con says, well worth the time. Yeah, well, thank you. I you know, I always enjoy putting these on, but I'm always trying to make sure you get something new out of every presentation. It sounds like we accomplished that for most people today. And Doyle says, happy Father's Day. And yeah, happy Father's Day and happy Granddad's Day to everyone as well. So speaking of that, this is a Father's Day kind of presentation, a special. This is what we teach in the Mastering Moving Averages course. And as I mentioned, Ray Clark, our Vice President, Educational Services, put together very special pricing for everyone here today. So just wanted to let you know about that. This is the pre-recorded lessons and mastery classes. So everything you can get started right away and go through the lessons as fast or as slow and methodically as you wish. You have access to them for an entire full year. The mastery classes will not be live. They are pre-recorded, but Ray has kind of included something in the bonus that helps out with that quite a bit. So I'll get to that in a minute. But the lesson schedule, we show you how to set up your graphs and searches in that first lesson, give you that sort of overview so you can set up your own searches later on and save them, set up your graph layouts and save them. We do set a foundation for the VectorVest timing or VectorVest system. We look at market timing, the stock analysis, and graphing. And then we get right into it in lesson 3 or more into it with understanding moving averages, the definitions, the moving average types and uses. And then this is maybe my favorite session. I did get a lot of great feedback on this. It's trading with a single moving average, a 20 moving average trading system. But there's some key elements to this and money management that can make this, your best trading system if you decide to follow it. Trading with golden crossovers, swing trading, intermediate and long-term trading systems. Using moving averages is support and resistance. So again, we go through that trend trading setup. We talk about mean reversion with a lot of examples, of course. Moving averages and candlesticks, moving averages as trailing stops, the EMA squeeze as well as long and short, multiple moving average trading system, defining the trend, how to read RT. This is a really important lesson. Not only RT, but the 40 moving average of RT and how we use that with the Guppy multiple moving average system. We were thrilled to have Dr. Barbara Starr actually present and record her surfing the reversal waves. Did a really fabulous job on that. And she actually came out and attended and answered questions at that Mastering Moving Average. So we've incorporated all of that. The Midas Touch system, not just the original Midas Touch with the 3-month graph and short-term swing trading momentum plays, but just to show you how effective it can be for a long-term trading system. And then the bonus session is trading the high-low moving average bands, how to set that up on your graphs, and includes in that section or bonus complete lesson review. I go through all the lessons with the key elements. And again, the course includes the 6 recorded mastery classes. So regularly, this is $5.95 US dollars. And I mentioned, for those of you who have been watching, Ray did put together a nice bonus. It's a Father's Week Bonanza price, just $2.95 USD for all of the lessons. So I hope you'll take advantage of that. It's www.vectorvest.com/.ca, or sorry, let me get this right. VectorVest.com/MA, and I'm sure John will be able to type that into the chat box for you. It's VectorVest.com/MA. I'll just watch and see if he's able to do that. And I'll try to answer any questions that are coming up as well. Joe says, if you take the class, do you provide specific MA searches geared towards it? Yes, there's a search with virtually every strategy that we show in the course, Joe. I think maybe even all of them, but I for certain most of them, if not all. And we show you how to modify the searches for the different countries. Usually it's just a volume tweaking. But we show you that and help you set them up. And because we use moving averages, that's a technical indicator. You do need the Pro Trader, and we do give you the Pro Trader with the course, so you get a chance to try everything out with the Pro Trader. I recently received this from our marketing team. It's from the recent course surveys, I guess, and I just really like it. It's a VectorVest subscriber from the UK for at least 7 years. Lots of free instructional broadcasts, which is certainly true in all our countries. But I recently subscribed to a paying course, Mastering Moving Averages, which would rate as the best course I have ever attended. And that includes a 47-year career in the finance industry in the UK. I'm quite comfortable using charts and moving averages for my trading analysis, but I have learned so much new stuff and intend to put it all to good use in the future. Every lesson turned into a demonstration of the software and how to navigate, set up, etc. Bravo. Thank you so much for that, Tony. Really appreciate it. So again, it's vectorvest.com/MA. John, I don't know if you were able to type that into the chat box. It definitely is the lowest price offered. I think we might have done the same at the financial summits, but it's a great price, better than the elite pricing actually. And it's just vectorvest.com/MA. So here's the additional bonuses you get. If you are brand new to VectorVest or looking at it to sign in, you get 60 days access to VectorVest Premium. If you're a current subscriber with end of day or intraday, on the US side, you'll get the premium real time for the US for the 60 days, as well as your regular subscription service. So that comes with Pro Trader, Auto Timer, Watchdog, if you don't already have it. So you'll get those 3 tools for the duration of the course, which is pretty cool. Got to get rid of my laser, I guess. And then, because we won't be having any live mastery classes, Ray put together this another bonus for everyone, and it's access to the live July swing trading sessions with Jerry and Steve, where they actually show you trade ideas and setups. They do, especially Jerry, I guess, uses the EMA squeeze on occasion, as well as his other pattern setups and candlestick setups. So you'll have a good chance to kind of see what that coaching is all about. It's every Thursday at 2:30 p.m. Eastern Time. And of course, you get the recordings for that as well. All right, so there it is. And of course, when you're going through the course, if you have any questions, you need help, you can contact our support team, 1-888-658-7638. And if you have questions relating specifically to the course, or you want to share something that you've been doing and just see how it comports with what we're teaching, you can always email me at stan.heller@vectorvest.ca. So with that, Jeff, John's flagging some questions for me. Jeff is asking, can you use moving averages to find option candidates? Absolutely. You're going to find really strong bullish and bearish trades by using the moving average strategies that we teach in the course. And options obviously can be very effective for you. Stephen says, do we show how effective each search is using the backtester? Stephen, we do a lot of quick tests. Because our exits are also moving averages as well as money management, we don't run the tests in the back tester, but we do a lot of quick tests. I've got my own trading, so we've got some experience with it for sure. David, because everything is recorded, there's no kind of official start time, although you want to get in, I would say, as early as possible, because you're going to have access to those those July swing trading courses. So you might as well have a good grounding by getting in as early as possible. These are the different lessons, and as I said, you can work at your own pace. And truly, once you go through lesson 1 and lesson 2, you can, and maybe lesson 3, you can kind of go along and say, well, I really want to learn more about the guppy, so I'm going to watch lesson 8. So you can kind of skip ahead, watch lesson 8, and then come back to the other trading systems and lessons later on. Ravi says it only shows 6 masteries plus a bonus module live. Yeah, so we have the 6 mastery classes, and then we have the bonus session. Correct. Sarantos, it's the $295 US, and that is for the for access for 1 full year. Correct. All right. I wonder if I missed any questions up at the top. Let me just scroll up there, John.
Stan.
Yes.
Can you hear me? Okay, excellent.
Awesome.
One of the common questions with regards to when these live coaching will be available for them, I just wanted to clarify that it will be July 8th will be the first one that they're eligible for.
Yeah, that's great, John. Thank you. So July 8th, is that the first Thursday? So that would
Yes.
that would be the first one, and it's every Thursday in July. Now, just to be clear, this is the swing trading coaching group. It's not focused on the moving averages unless they decide to show maybe the EMA moving average strategy and squeeze or stocks. But it is going to give you trade ideas, some information about patterns and different systems that they teach in the coaching group. The mastery classes that you will have immediate access to are all pre-recorded. So you'll be able to watch a lesson and go right to that mastery class where there were questions and answers and a review of that lesson. Joe, if you have questions, we have our support team. And again, you can email me at stan.heller@vectorvest.ca if there's something that, related to the course specific that support is not able to help you with, or it's specific to maybe a homework assignment or something you're struggling with that's in the course. By all means, you can send me an email at stan.heller@vectorvest.ca. But our support team is pretty great about anything related to navigation, graph setup, any questions you have about, if you're struggling with a search, that sort of thing. And again, you'll have access to the software for 60 days, and you'll have access to the course for 1 full year. Let me know in the chat box if you like what you've seen, if you haven't taken the course before and are going to be taking the course, or maybe you've gone to that link already. Just chat it in. I'm in, or something like that. We'll just see if it's something that is of interest to everyone. I would love to see it. I'm going to just quickly type in the link once again. But let me know.
It's already in there.
Oh, you've got it in. Oh,
Yeah, I got it in earlier.
thank you so much. I did it again.
Yeah.
Oh, and I didn't do it again. I typed in a totally different email. Forget that one. Yeah, Manucher says, I love it. I will take it. Joe says, interested. It's Father's Day, he says. Well, he didn't say that, but I can see that, and he's got to check with the boss. BJ says, thanks, Stan. Great presentation. Of interest, not time. Richard says, we'll be signing up today. Ravi is in. Thank you, Ravi. John is interested. So, if there's something holding you back, let me know. But I think you'll find you're going to get tremendous value from it, just as you did today's session. I think today you learned a few things that are just going to be really helpful to you going forward. But just multiply that times 11 because we have 11 lessons for you. Yeah, when I said it was going to be a comprehensive course, when I was talking to our educational team about it, I said, if we're going to do it, let's do it better than anybody else. Let's really make it comprehensive and give people something that will help them gain an understanding of moving averages. They won't be able to implement everything, and they shouldn't. You should implement one or two strategies at the most, do some paper trading, and then move up from there. That's always the way to do it. Linda says, I've taken the course and it made me more confident in my entry and exit points. That's wonderful to hear, Linda. Thank you for that.
Hey, Stan?
Yes.
Are you able to do something really quickly? If you can, open up a browser and see if you can walk them through the process of ordering, just to make sure everybody's clear on how to walk through that.
Let me see if I can do that. Sorry, I've got 3 monitors, John. I have no idea where it's going to show up. We'll take a look.
Okay.
Oh, did that just? Oh no,
There it is. Yeah, we can see it. Yeah.
So we just type in VectorVest.com and then MA.
Yep.
VectorVest.com MA, and you should see enroll today. And you'll notice there is an asterisk here, GPP and Euro customers. You will be charged in your currency. And then you just click on Purchase Course Now. Okay. Purchase.
You want to click it just so that I can show them something really quickly?
Absolutely. So I clicked it, and it's thinking.
It's working.
And there's your VectorVest order.
And then it won't make you order. So if you want to click order now, there's a spot that sometimes confuses people.
Okay, so we order
So
now.
on this spot, leave it right there. On this spot, if you are already a VectorVest subscriber, you click sign in first to be able to do that. If you're not, that is when you'll put in your information, then purchase.
Awesome. John, you just taught me something I did not know. Luis,
that is one of the most common confusion errors is this specific page with the orders.
I'm glad we were able to go through that. Absolutely. Luis says, I'm in. Thank you. Stephen says, is Trios pricing available through the weekend? That I do not know, Stephen. That'd be a good question. You could certainly call support and find out more about that. Sarantos.
Yes, it is.
Oh, it is.
It is.
Yep, John says
Yes.
it is. Sarantos is asking $2.95 Canadian. It's actually $295 US, Sorrentos. So you'll have to do that conversion. It's obviously going to be more expensive in Canadian dollars, although not as expensive as it was 3 months ago. Gary, the mastery sessions are all pre-recorded. There's no live mastery sessions. You watch the lesson, and then you can go ahead and watch the mastery session that's in the same lesson area. It's everything is pre-recorded except for the bonus of the swing trading sessions in July. This is the swing trading coaching group, and you can certainly ask questions there about the moving averages. Jerry was one of our co-instructors on this, so he's able to help you on that. And those sessions are at 2:30 Eastern, and they're recorded as well. But yeah, I'm glad you asked that, Gary, because everything is recorded for this special offer. David says, did we see any demo of the Pro Trader, Auto Timer, or Watchdog? We gave demo in the course of the Pro Trader in particular. That was the one that you absolutely needed to see for this, for all of our strategies. Con says, I have taken the course. It's great. Can I join the trading group swing? Con, yeah, I'm going to, I asked that question of our vice president, and he said, yes, if you have people on who took the course already and they want to take those 4 swing trading classes or so, whatever they are in July, 4 or 5, I'm not sure. I can definitely forward your name and email to Ray and get you in. All right. Any other questions, folks, before we wrap it up? I really want to thank you before we do leave to say thank you for giving us your valuable time here on a Friday afternoon, and really appreciate it, and really hope you have a wonderful Father's Day this weekend as well. John is...
Hey, Stan?
Yep.
Just the two people that are having issues with ordering, call product support so they can manually enter the order through the system if it's not working.
Okay. Yeah, Ravi tried it on another browser, he says, and it didn't work. So 1-888-658-7638 will get you in Canada. There are some international numbers here as well, and so you could try those as well. John says it's just slow. So John, you're in. Thank you so much for that. And Brandon is having trouble as well. Got the product support number, and he's going to phone. Well, listen, that's wonderful. I really appreciate it. I know you're going to love the course, and you'll get a lot out of it. It'll be very beneficial for you. So the number is here, 1-888-658-7638 here in Canada, US. And then these are the international numbers as well. Any last thoughts? Any last questions? I want to thank John for helping out as always. That was awesome. Any other last questions, folks? All right. Well, thank you. Have a wonderful weekend, everyone. And we'll look forward to hearing from you after you're into the course. Take care and wish you all the best.